Hi guys, before I start talking like usual, let's run a mic check. Last couple of weeks I've been talking for 5 minutes and asking for a mic check, and a couple of those times talking to myself. So let's get a mic check and then we'll jump off. Gerardo, hello. Sounds good from Matt on YouTube, and okay, so hopefully everybody can hear me like Matt can. So I'm going to jump right into to this week. It is Friday. Thank you, Gerardo. He hears me as well. It is Friday. I'm in CoinMetro, my office here in CoinMetro headquarters in Tallinn, Estonia. I'm Kevin Mirko, CEO here at CoinMetro, and we have a bit of a schedule we like to follow, or I like to follow, here on our AMA session. So I'm going to jump right into it. Usual first topic of the day is news of the week. So we have a curated list of news from Reddit and some other channels that we have presence on online. So I'm going to jump right into the first news topic here. First news topic, one out of nine. We got a couple of them this week. Cryptocurrency airdrops at serious risk of regulatory scrutiny. So there was something that made a bit of waves. SEC basically jumped on a company that gave away a free airdrop. Name of the company was Tomahawk something, and they basically called it the Tomahawk Order. So the Tomahawk Order basically stopped, or basically put a cease and desist on a company from doing an airdrop, because basically the SEC was saying it didn't pass the Howey test, meaning that would be considered a security. Why didn't it pass the Howey test? Well, they were saying that they were basically remunerating or using it as a vehicle in order for their own economic interests to foster growth of their platform or something around those lines. I can't say that this is really really newsworthy. For the most part, I mean, it's newsworthy, but I've said this a lot, and I when I frequently have conversations with other token projects that ask for my advice on certain topics, whether it be token structure or how to avoid being classified as a security, for example, you have to look. There are no token laws anywhere in the world. There are token guidelines. There are some very loose frameworks, but there's no legislation, which means, for the most part, especially in the US, the SEC, who's usually one of the most active regulators in the world, are going to look at existing regulatory frameworks and guidelines that apply to securities or that apply to tradable assets or whatever. And if you go around giving out a bunch of Class B shares to people for free so that they will go ahead and then promote your company or whatever, you're giving out securities. You need to be licensed to do so. So I think the Tomahawk Order, or the Tomahawk case in general, is not your particular your normal airdrop. But anything you do that has anything to do with anything that can be classified either as a security under current law, just take the word token out of it. Who cares if it's a token, if it's a security thimble, a security paper, for I don't know, whatever it is. The word token should just be removed from the classification. If it can be classified as a security, you should operate your business as such, period, especially if you're operating within the United States and without any type of exemption. So what I would say is that the more oversight the SEC starts to give, overall, it's good. It's good in the essence that we need to get to a point where we have legitimate frameworks. We don't have them yet anywhere in the world. We need to get to a point where we do. The faster we get there, the faster we can shape the market, the faster everyone knows what they need to do, and the faster everyone can do it. So in a whole, while the people that get caught up in these type of, let's say, in-between situations where something, isn't as clear and they end up getting caught up in a legal dispute, it might be difficult for them, but they should have known the possibility of getting caught in that legal dispute, because they should have understood before they did it what the legal risks were, and obviously they did not. So word to the wise for anyone that wants to do an ICO or get involved in an ICO or invest or contribute to an ICO, you should understand what you're doing from a, let's say, traditional regulatory framework, I guess, to understand exactly how any applicable regulations are applying to what you're doing, not just what may happen in the future. Number 2 on a list of 9, UK insurance market leader Lloyd's of London will insure a crypto custody platform by U.S. custodial firm Kingdom Trust. So Kingdom Trust, as far as I'm aware, I think they got bought out by BitGo actually. But yeah, this is custodial platforms are usually insured. I think like everybody in this industry, insurance companies as well don't quite understand crypto in general. They have a hard time seeing how they can secure these type of assets. To be honest, it's probably an insurance company's dream. Why is that? Well, let's say you have a safe in your house and you want to insure that safe. And the insurance company is going to ask you, well, how much do you want to insure your safe for? And you can ask the insurance company, well, how much would you insure this safe for? And they say, well, it depends on what you're going to put in it. You say, well, gold bricks. They say, well, 200,000 euro. And so you insure it for 200,000 euro, and you put 6 paper clips in it. Your house gets robbed, and the safe is broken into. You have insured for 200,000. You make a claim. It's very difficult for the insurance company to track that claim, file that claim, or understand if that claim is wholly legitimate, especially if your house was actually broken into. So when it comes to crypto assets, you store crypto assets on hardware for the most part. So even if it's well, obviously if you're storing it just on a paper wallet or something like that, it does exist somewhere on some piece of hardware, that's for sure. But if you have a hardware wallet, let's say a ledger wallet, and the insurance company says, look, if you put that device in a bank vault or a bank safe or a bank safe deposit box, we'll insure each one of those for up to 2 million euro. The insurance company can see that 2 million euro sits on that account at any time. They can create an API that links that wallet back to a system that can basically knows when those funds are accessed. If the funds were stolen on a Monday and they have proof that the devices were stolen, they absolutely know what was stolen. And if there's limiting whitelisting done on those hardware wallets, obviously that means sharing of keys at some point to a custodial operator, but that's how custodial works right now in crypto anyway. It means that the insurance company can protect itself and it can be insured. And on the other side, the crypto can be insured. It's almost a perfect model. So it's not surprising to me. Lloyd's also is probably, I think they were the first company in the world to insure, a supermodel's legs or a basketball player's feet or whatever nonsense. So they usually are on the forefront, let's say, of the insurance business. So the fact that they were one of the first ones to jump in makes sense. And this is something that we're looking at too. Insurance is a big thing. If you can insure deposits or have some type of custodial offering where crypto doesn't necessarily need to touch the exchange, it means that you're giving one of the biggest benefits to a completely decentralized exchange to what would be a semi-centralized exchange. So you're taking out the trust because the assets never need to actually touch the crypto exchange's infrastructure, and even if they do, they're insured. Number 3, SEC to loosen the requirements to become an accredited investor. This is actually a bit of a misstatement. What was said is that they're looking into ways to streamline the process, and some of those could include making the requisites a bit easier. They're not that hard as it is. For instance, if accredited investor is 200,000 yearly income, I'm not saying that that's a small sum. What I'm saying is that there's a vast amount of people in the United States that make that much money, or 300 between themselves and their spouse. It's rather a large percentage. It's not like that in every country of the world, but this is a U.S. We're talking about U.S. regulation. So I think the real, I guess, issue here is why they even set those in the first place. Why is money? Why does making more money at your job mean you can make better decisions about where to invest it? That's asinine. It makes no sense whatsoever. I've met a lot of people that don't make a lot of money that make smart investment decisions with the money they have, and I've met a lot of people with a lot of money that make really stupid decisions with the money they have. The amount of money you earn on a yearly basis or the amount of net worth you have has absolutely no correlation to your ability to invest those funds. So I think really what they need to do is completely reformat what an accredited investor is. It should be someone with experience or at least knowledge of how the market works, the understanding of risk, etc. So you need to pass a test. You pass a test, you should be able to invest whatever you want. Doesn't matter how much money you make. But again, the SEC hasn't really said how they would do this. But I think it needs to be done, especially in a digital age. Things need to be much more agile than having to ask investors for copies of their tax returns to see if somehow they know what they're doing, which is, well, to put it plainly, stupid. Number 4, Japan's regulatory body, the FSA, putting some new rules in place for crypto exchanges to protect the consumer from scams and hacks. The only thing that really was released about this is now the questionnaire that you have to fill out when you're actually applying to become an exchange is now somewhere in the realm of 400 questions versus, I guess, what was initially something like probably 150 to 200. You know, the bit license questionnaire is about, I think, 300 and something questions. Even the questionnaire that you get, let's say, to get an FX license, about 110 questions, and then there's secondary and follow-up questions. Probably you get about 200 questions all in all. More questions, great. So they have some guy who wants to scam somebody has to pay a consultant a bit more money to answer 400 questions rather than 200. I don't really see any real consumer protection there. But hey, that unfortunately, you know, I'm pro-regulation. That doesn't mean that I think what regulators do normally actually makes sense. A lot of the things they do help the market. Some of the things they do don't make any sense. This, I think, is one of them. There are ways to protect consumers, and one of those is education. 400. You can ask the guy who wants to scam people 1 million questions, and he'll be able to answer them because he's probably an intelligent guy. Most people that end up running large scale, you know, whatever, that go through a process to get a license to scam people generally aren't idiots. So they can probably answer 400, 500, 600, or 1,200 questions, whatever. What they need to do is ask questions on the other side. Because, and I hate to say this, but if you go out on the street and somebody's playing 3-card Monte on a box outside of your apartment building and you lose $1 million or $10,000 to a guy because he scams you on a street, it's not going to make the paper. Nobody's going to care about it. And the regulator's not going to come out to regulate 3-card Monte in the street. But if you go to a casino and you're a grandmother and you're on a fixed income and you lose your house at the slot machine, nobody's going to care, except maybe your grandkids who you now have to live with. You know, but if you happen to go on a crypto exchange and lose your money because, well, you didn't educate yourself, which is your fault. For some reason now it's the problem of the crypto exchange. That's stupid. But again, this is how regulation tends to work, and especially when it's a new industry, when the powers that be kind of like to let us know how bad that industry is. But again, the FSA probably should do more. 400 questions isn't though what they should do, I don't think. Number 5 on a list of 9: hackers breach mega Chrome extension to steal crypto private keys. Well, I'll add that to my list now. I think I'm up to maybe 134 hacks, I guess, or something around those lines. What can I say? Again, I always say the same thing. It's all about protocols. When your entire business model revolves around holding other people's assets, the one thing you could do, you know, is make sure they're safe. I mean, come on. You know, it's... But again, we're in an immature market with immature products, with immature ideals, immature structuring. Everything about this market right now is immature. It's getting better. It'll take a lot more time for it to get probably to a point where it will become quote unquote mature, but we're getting there. You know, don't use Chrome extensions. You know, MetaMask is up to this point, I guess, has been quite secure, but you know, it's your money. I don't think most people with their own, like with their, I don't know, if they had a briefcase full of money, wouldn't, I don't know, somebody on the street that said, hey man, give me the money, I'll safeguard it while you walk in that restaurant, wouldn't give them their money. But they'll stick it through a Chrome extension that they probably don't even know how it's coded or who coded it or whatever, or they'll put it into a website or a wallet system just because the website's cool. You know, if there was a guy with a really nice suit standing out your building and said, give me all the money in your wallet, I'll hold on to it while you go home, and tomorrow morning I'll give it back to you. Most people wouldn't give that guy their money. But for some reason, when it's digital, it just becomes easier. You know, watch what you do with your money. Always try to have control of your money. And when you give it to third parties, make sure that you have the ability to verify those third parties, to understand at least if they know what they're doing. If there's some, and that there's protocols on their side in place to protect your funds, because it's your money, not theirs. Number 6, Goldman drops Bitcoin trading plans for now. I hate to say this, but I think probably most institutional players were happy about this one. Goldman doesn't have the best relationship when it comes to liquidity provision, to be honest. I know in the FX industry they're pretty notorious for some, let's say some things that probably in a perfect world wouldn't be legal for them to do when it comes to basically being able to manipulate the way orders are processed, last look orders, hold them on their book without processing to see if it goes in their favor or not before they actually execute, these type of things. Not that they're the only ones to do it, but they're probably one of the more notorious in the industry. So I know that a lot of people are speculating that this has been causing the recent market fall that we've seen. And I would say it's partially because of it, because obviously there's a lot of dumb money causing this fall, meaning that it's money that's not institutional money. So very small news stories basically create a domino effect where people start to sell. You have ICOs that are no longer holding on to their Ether or their Bitcoin. They're immediately selling it when they receive it, rather than sitting on it and waiting and paying people in crypto. So you're basically you're getting a lot of sell pressure. But these type of news stories don't help. Again, education would have helped all this if people understood that an ETF being canceled is meaningless for the most part. And I know I've touched on this before, but I'm going to touch on it here again just because we're on the subject, or almost on the subject, I guess. If an ETF, even if it's fully backed by Bitcoin, is launched tomorrow, the fundamentals behind that, the news, will push dumb money to buy. So that will cause the price to spike a bit, probably going back to a more recent high, but definitely not all-time highs, not even close. Then what happens is those ETFs maybe get flooded with, let's say, 100 million, 200 million worth of buy requests. They're not going to go to Binance, CoinMetro, Coinbase to buy their crypto. They've already purchased it, or they're purchasing it in bulk via block orders through some type of dark pool or some type of exchange between themselves and the buyer at a fixed rate. They're not going to buy it on the open market, meaning when they buy it, they're not going to affect market price. It will take time for them to use up all the available liquidity that's available in these blocks. And if retail providers are selling back liquidity in blocks, it will take even more time. Eventually, they'll get to a point that the market grows to an extent they do need to go more on a public basis, and that will affect price. But that amount of time that needs to happen is a substantial amount of time, especially in crypto talk. Unfortunately, dumb money follows the news, but they misunderstand the news or they read too much into it, and they push the market to an extent that it shouldn't necessarily be pushed. Again, showing the immaturity of the market. Number 7, EU lawmakers weigh standard for ICOs under crowdfunding rules. So there's a meeting right now going on, I don't know if right now, but today, with all the EU finance ministers, basically talking about crypto and how to regulate it. We're not going to get any regulation out of this meeting, but we may get a little bit of framework guideline, or at least some talking points tomorrow or the next day. ICOs and crowdfunding. Look, ICOs are secure. The way ICOs are run today makes them a security by almost every written law on the books. Crowdfunding doesn't give, at least textbook crowdfunding, Kickstarter, when you buy something, you get a t-shirt. And if they don't produce anything, well, they didn't produce anything. It's different because you don't go to Kickstarter and then hope that and then Kickstarter gives you a Kickstarter token or something, and then you speculate on the fact that it might be worth more money in the future, or you're buying a product so you can resell it. That's not how Kickstarter works. That's crowdfunding. The way ICOs work is securities. There could be a market for ICOs for crowdfunding, for sure. But it's difficult because you're giving the token, and that token, unless it gets fixed at a fixed value, and then why would anybody buy it? Because right now most of the buyers for tokens don't buy them because they like the token or they really, really like the product. Most people buy based on speculative reasons. So I think that's a hard stretch, to be honest. I don't think at the end of the day all ICOs are going to be classified as crowdfunding. It just doesn't make any sense, to be honest. And while the regulator wants to be careful not to completely destroy the market, they also want to be careful not to completely destroy their own reputations countrywide and allow frauds or companies to basically sell unlicensed securities. So they're going to have to figure out a happy medium. And the ECA, the European Crypto Association, in the next coming month or so, we're going to try to help them do that. Number 8 on a list of 9, someone took out a 74 million short on Bitcoin right before the drop. So somebody got lucky. I would say that when you look at the markets, I mean, if you're even just a technical guy and you're looking at technicals, that drop was coming. I would say it could still go down as probably below 3,000 before we see a real low. Will that happen before we see middle term highs? Maybe, maybe not. But there's definitely a lot of downside pressure. Bitcoin's holding up better than Ethereum, mainly because I would say because of the price of mining. To be honest, big miners stop selling when it goes below their cost structure. And a lot of miners pay way more than 6 or 7K, but on average, that's about where the mining price sits. For Ethereum, it's a bit different story. There's a lot of competitors that are trying to dethrone Ethereum. I'm not saying they're better. I think Ethereum might be one of the only truly decentralized smart contract platforms. There may be another one. And that was actually from one of our old advisors, James Wah. I'll give him credit for that statement, but I think he's right. So at the end of the day, Ethereum, though, it doesn't have a limited supply, et cetera, et cetera, et cetera. There's, from a market perspective, when you look at technicals as well, the next spot that if 150, if it breaks 150, which wouldn't be that difficult if it got there, US, you're looking at 50 to 90 is the next really realm where it could maybe pick up some support. So it might get really ugly before it gets prettier. Unfortunately, from a market perspective, I'm not saying it's going there. Don't start taking short orders on my benefit. I'm just giving you, let's say, the scenario of the bears right now. Though there is a lot of bull scenarios as well that come into play. Look, I'm sure somebody got this from public futures information or options or whatever. So what? Big deal. Every day there's people taking shorts and longs. Somebody's got to be right for somebody to be wrong. Actually, rhyme. That was kind of nice. Who cares? I mean, it's public information. Anybody could have seen that, and I'm sure there was a bunch of people taking longs too that got screwed. Number 9, Shapeshift ends anonymity with announcement of mandatory KYC data collection. I told you so. I guess comes into this one. Even decentralized exchanges, and Shapeshift wasn't completely decentralized, but just to put a cherry on top of this, will require at some point KYC, or they will be shut down as far as regulation goes. So no news here. You cannot offer to any limit, even if it's €1, money to change hands from one place into another without proper identification of that client. Period. So no news to me there. I think a lot of the guys that said that regulators won't care. It's all about the innovation. There's so much money at stake. They're going to let us do what we want. Probably are shedding a tear. Maybe after they read that. But business as usual, I guess, for us. Moving on to part 2, usually cover Reddit questions. So we compile Reddit questions over the week. Sometimes we get really good questions. Sometimes we get kind of funny questions. Sometimes we get kind of trolly questions. But overall, usually there's a good subset of questions, and I try to answer them to the best of my ability. We're going to go through the list. I think we have 12 questions. And after we finish with these 12 questions, after I finish, we'll jump into live questions on Facebook and YouTube. So question number 1 from Reddit. Robin Timmerman, last AMA, you said there were no significant regulations yet in crypto. By now, aren't you considering the non-existing regulations a bit too much? You can take them into account as much as you can and meet and converse with hundreds of regulators until 2075, but at some point you will have to cut the ribbon. Probably next month, another unforeseen regulatory hurdle pops up anyway. I partially agree with you. Obviously, if there was no commercial side of this, meaning we had unlimited funds and we can take all the time we want, I would make sure we had license up the yin-yang before we went forward, because it's the best way to protect us in the future, and the future is what counts. Future meaning longer-term future, not tomorrow. This industry might not even be here in 2 years if things aren't done correctly, and I can't preach on a soapbox saying people need to do it correctly if I'm not. But from a commercial standpoint, we can't spend money forever without going live. So we've actually had conversations internally. We had another board meeting this past week where we discussed certain aspects of how we're going to launch the platform with fiat currency, how we're going to utilize fiat currency, how it's going to happen. It's going to happen. So we will be moving forward. We will be doing that after talking to the regulator, especially here in Estonia, as well as in other parts, and with an ongoing license application to cover specific pieces of the business, with the regulator knowing what we're doing. So I agree, though I do think that the model of let's do anything we want, like kind of do what you want and ask for forgiveness. It's better to ask for forgiveness than permission, which is this is how Mexico basically operates. And I lived there for 18 years. It's a famous saying. Lots of countries are like that. When you're talking about a new financial, there's a lot of risk, and it's personal risk, right? So it's not just business risk. It's my own risk. It's my MLRO's risk. If we do something where we know that we're doing something that requires licensing, and we do it anyway without any type of permission or opinion from the regulator that allows us a little bit of leeway, we face jail time and long, lengthy jail sentences. We have to be careful, though we do have a commercial, there's a commercial aspect, there's a money aspect, there's a funding aspect, etc. So we don't want to burn capital forever. So we will be going live. We will be going live with fiat currencies. And we're just figuring out the last few bits of details. But we will still be on a regulatory hunt, talking to hundreds of regulators. It's the only way forward. And I know it's starting to become shapeshift. You're starting to see airdrops getting hit with regulatory stuff. You're starting to see a little bit of this cycle that I've been talking about for months. You're going to see a lot more of it. When you start to see prosecutions and you start to see jail time, you'll start to understand what I feel as a founder in the company. But like I said, we are a commercial venture. So at some point, yeah, you're right, we do need to cut the ribbon. And we're halfway cutting the ribbon. Don't think that, sometimes I make the mistake of being too open with you guys and too honest, which means I just talk from the top of my head. I give you guys my ideas. Doesn't necessarily mean that that's what will happen. Things change, right? But I'm sometimes I'm a bit too open and honest. But obviously, as you said, at some point the ribbon needs to be cut, and it will be. Number 2 from Matt's a Boss. You said last day, May, that during Q4 we will start to bring pieces of the infrastructure live. By pieces, do you mean Simplex, Intermediate, and Trade View? What order will these pieces be launched in? At what point relative to things going live will XCM be tradable? So as you saw on the beta, when we've been in this beta process, we did Simplex first, then Intermediate, and then TradeView. Same thing will happen as we push it live. So September 25th right now is our internal goal to get these 3 pieces into an open beta, and then have some days before we completely push it. Let's say push it live well, not publicly, but even internally publicly. I'm just going to confuse people more here with this, but so that we have like 6 days to basically get the marketing done and make sure that everybody's aware of it, essentially inside of our own community email list, Telegram, etc. And we'll follow the same path when we launch these things live, meaning Simplex will go first, Intermediate, and then TradeView. And at what point would XCM be tradable? XCM is going to be tradable essentially right before we launch publicly. And we're going to do that because we want to try to create a hype cycle and try to force some more value behind the token. It needs to have it's a utility token. It needs to have a utility, which means the function that all fees are being converted into XCM needs to be functional, and it won't be straight away. So it won't be day one that things go live. It's not a long process to get that ready, but it won't be ready day one. That needs to be done. And we need to focus. We need to push as much use behind the token, and we need to push much hype. So, and it behooves everybody to make sure that's done. But we want to do it as soon as possible once we're live, because we need it tradable to be fully live to the public. When you're trading margin, you want the books tight. Will you be looking to bring more liquidity providers before you launch margin trading? I think the books are already going to be quite tight. We have signed contracts with 3 now liquidity providers and a few others on the back burner, even one that provides deliverable futures and options, which we may look into offering at some point in the future once we're live. The book will already be quite tight, but yes, before we start to really push margin trading, so we can push margin trading to one particular currency, we can only maybe only accept Bitcoin at first, or only accept whatever, or limit the pairs to the pairs with the most liquidity, at least at the get-go. We will do what needs to be done to make sure that the market functions smoothly, but it's already going to be quite tight. We have some deep liquidity, so it's not, I'm not saying, I mean, eventually this deep liquidity is going to be available to everyone everywhere, just like it is in FX. FX liquidity from one broker to another is just whatever. Just really depends on how they operate and how they use their tech to more, let's say, use that liquidity to its best, use that liquidity better than someone else, let's say. Yeah, anyway, it will be tight, but we will closely monitor to see what needs to be done to make sure that it's streamlined. At the moment, I understand SEAM is using custodial solutions like BitGo for wallets. Is CoinMetro going to use custodial services exclusively, or will CoinMetro have its own wallets? Well, we do use BitGo right now. We don't use their custodial services, but we do use their, let's say, enterprise-grade wallets, which include whitelisting capabilities, blacklisting capabilities, rate limiting, et cetera, et cetera, et cetera. Semi-custodial services, let's say. They do not provide access to every token. So there may be tokens we will list that will not, or coins or altcoins that we list that aren't part of the BitGo infrastructure, which would require our own wallet service. One of our liquidity providers also offers custodial services. More custodial services are coming online. I think that as in our initial push out, and probably for the first year or two, we will look to partner with custodial services until we have the ability and the time and the team to be able to create our own and do it better based on our own needs. Will coins that aren't businesses, e.g. Dogecoin, be listed, since obviously they can't go through the same standard listing process and don't have CEOs, etc.? On a side note, I think Dogecoin would be a very good coin to list. Noobs love it because it's cheap and fun, some from a regulatory point of view, as Bitcoin, and has been getting great volume recently. You're right, they don't have CEOs. There is no, let's say, foundation usually behind some of these things. At that point, it comes down to a vetting process that really looks at market mechanics, looks at our ability to curtail any type of manipulation, volumes, overall volumes in the market, making sure that there's enough volume so that we can use the tools we have to curtail any type of manipulation on our own platform. So it's possible something like Dogecoin, if people wanted it, could be listed. And we will have a set of criteria for coins that are essentially just novelty coins or non-fungibles or whatever as we move forward. So sure, yes, it's possible. Number 3 from Robin Timmerman. Again, would you rather be remembered as a guy who made a very lucrative and respected financial platform, or a guy who helped shaping the regulatory framework and transition crypto towards a mature phase? Number 2. Because you can't have a very lucrative and respected financial platform when you don't follow regulatory guidance, because you'll be put out of business. And then even if you were respected, let's say years before or months before, when you're put out of business because you had no idea what you were doing, and it's made such in the media that you didn't follow best practices and all the bad things that were happening behind the scenes, then you can't be respected. So I would say it's number 2, 100%. That doesn't mean that there aren't, having a lucrative platform can't be part of number 2. Actually, number 2 is the only real way in a real market to have a lucrative platform. But if I had to pick between the two, in the real world, it's number 2. If this is, what if regulation didn't really exist or didn't matter, then of course, yeah, number 1's an easy choice. But in the real world, number 1 doesn't exist. Number 4, Zenecki. So Kevin, what's up? It's one of the best questions of the day. What's up? Work's up. I've been meeting with a lot of people here in our talent offices, different projects that are coming in for some advice, kind of like pre-ICO Express. I've been helping a company here launch to formalize the tokenization structure around a real estate project that basically will be offering project access tokens that aren't classified as securities, that provide yield in the way of bonus tokens here in Talon. So lots of stuff going on, lots of CoinMetro stuff as well. I'll be traveling to London on Monday to meet with several different providers, several different partners that are helping us with debit cards, with e-money setup, and a couple other things, as well as the FCA. and then on Tuesday in Berlin to another provider, another bank that provides some solutions for crypto entities. So we're going to see maybe we can maybe it makes sense for us to partner with them. So lots of things going on, normal stuff, and some more maybe exciting things. But yeah, work. That's what's always up with me. I don't really have a personal life, so work, work, work. Number 5, Bruce Lee 707. Hi Kevin, if there is a flash sale again, will the contributor be able to buy XCM token directly using euro from a non-resident of SEPA country? How can this be done? It depends. If we do the ICO again through Hong Kong under the same terms and conditions, then no, we wouldn't be able to provide access to, let's say, fiat purchasing or credit cards. If we do it from Estonia and we get approval from the bank in order to see that funds flow in, then yes, we would be able to do within the SEPA and outside SEPA zone, euro, USD, pounds, Canadian dollars. We have several currencies already lined up through some payment gateways, and euro right through our banking partner when it's in the SEPA zone. So it depends on where it's set up. And those are ongoing talks. Haven't been escalated yet because we want to make sure that we're actually going to do it before we move forward with the legal costs. We have a head of legal that starts next Monday, so this will be one of his tasks as well. But it still costs us money to have him research it. So we want to be more on the yes, we're doing this side before we start to figure out where it'll actually happen. Number 6, Theo Zinhoft, something like that. 2. Will we have margin trading on day 1? No. Margin trading will the core. Actually, I'm going to check. Give me a second here because I'm going to bring up on my side project management here board just to give an idea because I don't remember when the actual coding started on the margin facilities. So on September 15th, so next week, we will actually start the project itself to bring in the functionality of margin trading. And that includes the development as far as back-end development, plus front-end, plus GUI, plus all that good stuff. So the idea is that once we go live, we want to get margin trading out ASAP within 30 days, hopefully less, because the exchange business on its own, one-off exchange, is not a money-making business. So bringing in margin trading is imperative to make sure that we actually see profits and not just incoming revenue to cover onboarding and monitoring costs. OG7, if someone registers right now and then contributes in the flash sale, would they get closed beta access or have to wait until public anyway? Depends. Right now, one of the criteria for people who have been selected was a contribution of over X and whatever X was. So if they made it into that over X category and they also were in Telegram and they also opened our emails that we sent them and the open rate was high enough, then yes, they could be. Or if they sign up before a certain date without contribution, will they be in closed beta or just public unless any contribution was made? The open beta will be open to everyone that is a part of the CoinMetro, let's say, family at that point. That would mean more than likely it would have to be scaled in a bit, but the 7,000 that contributed would get in, let's say, pretty much immediately. And then we would see of the 40 some odd thousand that we have on an email database, which of those we decide to give access. If someone's like only an airdropper or they just logged in and never really participated in anything, then the probability is that they wouldn't have access. For example, first 50,000 registered accounts could have early beta access with fee-free trading, or it could be an incentive. Yeah, there's ways we can play this, and to be honest, I haven't sat down and really thought about it, and it's not just my job, so I know marketing's been thinking about it, I know operations has been thinking about it. I haven't yet sat in a room with everyone to discuss this. This is something that'll probably come up in our next board meeting or the one after that in the next 2 to 3 to 4 weeks. But yeah, there's definitely ways, and we've briefly talked about this, how we can use different strategies to push people into the beta, to push clients, et cetera, et cetera, et cetera. Number 8, again from Robin Timmerman, the fee system. Paying fees in XCM, even when you don't have any, is quite unique. Did you patent this system? I haven't yet seen any exchange plan or use it so far. Nope, not yet. There's several things that we're looking at from a patent perspective. but we haven't yet moved into the patents. Now that we have a head of legal, that'll be something on his plate as well as trademarks. We have a trademark in the U.S. We don't yet have trademarks around Europe, though we are in the application process. No, not yet, but good point, and it is something that's been discussed. German Cardano, number 9, what's the current sprint goal? I guess you're talking from a development standpoint, sprints, I guess. I'm taking a guess here because it's definitely not a clear question, at least for me. Maybe I'm too old. Maybe I'm not getting the point. But we actually don't necessarily use sprints. It's more like Scrum, I guess, when I really think about it. Yeah, our team actually really likes Trello, so we use Trello boards. And I can go down a bunch of them right now with you guys, but essentially what's being worked on right now is accounting transfer daemons, exchange bots, exchange C++ core, Node.js core, exchange on the back end with continuous improvement for the C++ core, WebSockets interfaces, community pages, trading UI, lending UI, admin dashboard, integration of chain analysis and other tool sets. Anyway, those are just some. There's a lot of them. So I'm sorry I don't really get the question, but hopefully I touched on it at least partially. Number 10 from Farch. Hi, Kevin. I had a look at the Trade TV3 platform mock-up, and it looks good. However, it seems this platform only caters to margin-type trading. Are we going to have a trade platform that looks like the mock-up that caters to exchange-type trading like Binance? There's also a comment from that same post from CoinMetro Fran saying, I've also seen the T3 mock-up, and it looks to me like it does not cater for margin trading. So actually, it doesn't cater for margin trading. So CoinMetro Fan would be correct here. What will happen is you will have a trade wallet. You will have your basic wallet, which can be used for trading. Then you'll have a margin wallet, and that wallet is going to basically cover most of the needs when it comes for margin trading, where you're going to be able to see basically equity, available margin, used margin, etc. So it's basically going to be incorporated into the wallet structure. The trade interface won't change, though I'm not saying that some of these things aren't going to be incorporated. This is not the first mock-up, but it's the first released mock-up, and I guarantee you after feedback it's going to change anyway. Number 11, Gaisa. Can you point out what makes CoinMetro to stand out from the crowd and why, in plain and simple terms, please? Sure, I think I do this all the time, but even since when we started the process, obviously we have, even right now, we have our tokenized asset management, which is a investment product that does not yet exist in the market. There are products that take the top 20 tokens or coins and basket them, and you can buy in, but that's lazy. Anybody can do that. This allows managers to have an access into the crypto market. It allows traders or people that don't know how to trade to just jump on the back of someone who hopefully does. We have our ETCF, which because there's no underwriting, so there's no banks that provide liquidity when you do an ICO, so that your price doesn't tank after ICO ends. This allows those tokens to be able to get a bit of liquidity. It also gives an easy diversification option to investors that want to invest in a broader market inside of the token world. We have the debit card that gets linked automatically to a wallet system. We have 3 different trade systems for people that have no idea what they're doing: intermediate, exchangers, and then traders. We have margin trading that allows to basically loan capital for a daily passive interest rate for investors, and you can borrow capital as a trader and trade more capital than you have or basically trade your capital on leverage into not a future, not a synthetic market, but the real underlying physical delivered market. And that's just on the face of it. On the back of it, we are acquiring licenses that are going to allow us to basically be Revolut, Robinhood, Coinbase, TransferWise, all rolled into one. So one app that can basically provide a full scope of financial services on and off the blockchain for substantially less than your bank, substantially less than other apps that exist, with a built-in infrastructure to basically bring people on a journey. So we educate them and we support them. It's a very holistic approach. I'm a realist, and I have a lot of experience in the financial markets. I can tell you that while we may call ourselves an exchange today, most exchanges will be brokers at some point. When exchanges, real world exchanges, NASDAQ, FTSE, CAC, Dow Jones, etc., start to take over the exchange business, unless you have a footing in a region and a very good footing in a specific region, you probably won't become an exchange. You'll just have to become a broker of the local exchange. That's why we're doing a regional push where we're Europe, Asia Pacific, Latin America. Instead of trying to do a full global push at first, if we become top 1 or 2 or 3 or 4 or 5 in these regions, we may actually become an exchange in those regions once the regulation is applied to tokens. So from a retail, from a front-end perspective, we have a lot of differences between what we do and what everyone else does. And from an operational perspective, we are vastly different. And I think anyone that does business with us can attest to that. You can ask our banking partners, you can ask to even guys that we have a phone call with for 30 minutes to talk about what we're doing. They'll tell you that no one else talks a game like we do. Our focus is completely different, and we come from a much different space than most everybody else in this industry. So there's lots of differences, but hopefully that touches on many of them. Okay, guys, I'm going to jump. As far as an update goes, I touched on a few things in there. Usually I do a quick update here. Fortunately, the last couple of weeks for me have been nonstop. Not that it wasn't nonstop before, but it was nonstop before operations. So I was very much into marketing, very much into development. Now, obviously, I'm still into those pieces of the business, but I'm also now basically pushing into a more outside operational role, business development role, and focusing on making sure that we have everything we need so that development, marketing, and everyone else that support can function to their best ability, and that we have an ever-expanding use case underneath our umbrella here. So lots of things in and outside the office. So from a perspective, I think next week I'm going to bring on Sebastian, perhaps if he has time, our COO, who can give a quick roundup of basically what's been going on. What I can tell you is, if you read the email that was sent out, you know that there's a trade mock-up going around. I think in the next 7 days or so, 10 days, maybe even less than that now at this point. There will be that will be live inside the beta as well. We have about 2,400 people in the beta now. We're going to push that up to 7,000. Goal is around the 25th, from the 25th to the end of September. We're on definite track to do that. We're hiring. We're still hiring. We hired a head of legal. We just hired a new developer, a back-end developer. We're looking at a few other candidates. We're bringing on now payment officers here so that we can train them on how systems work, and they can help us basically build out the use sets and the rule sets for how we're going to run payments to make sure everything's streamlined. So there's lots of stuff going on. But hopefully we'll get some questions. I want to get to the questions, so I want to give enough time for people that may have posted their questions already. So I'm going to jump into Facebook first here. Just give me a second while I load this up, because the text for some reason here, see if I can adjust this, is monstrous. Let's see. Oh, yeah, there we go. That's easier. Okay, so I have a question I see from Pete John on Facebook, I believe that is. It's just Goldman fake news. Okay, so Goldman's saying that possibly this is fake news, that they don't want to get involved in the crypto trading desk. One way or another, I don't think it's a big news story, to be honest. Just because they're not opening a public trade desk doesn't mean they don't do dark pooling, which I'm sure they probably already do. Which is where most of the action would happen anyway. Again, big blocks of any type of asset don't get traded in a public market because, well, when you have to get rid of, X amount and only Y amount is traded a day, you're not going to push it onto the public market and end up paying more or losing money when you can just do it in a one-off transaction for a fixed amount, so you can control your risk. And that's not going to change with crypto. So. Let me jump on YouTube here. I'm just going to try to, give me a second here. This beautiful little screen we have here might look nice, but unfortunately it's not very readable. So I'm going to run over to YouTube directly, and I'm going to pick these questions up from the website itself. I see a Geraldo from on Facebook. There are quite a lot of issues on the beta, even with the regulatory setback. I feel Q4 might not be possible. Thoughts on this? I think a lot of times right now, because we have the feedback from you guys collectively is very important. And a lot of times we see those errors before we even push it out. But the point is that we want to get the feedback. We want to understand. Maybe something we think should be corrected doesn't necessarily need to be corrected. There are also small things that we know need to be corrected, but rather than focusing on time, we push on to do something else. We're building out our team. We're building out. So no, I don't feel that Q4 is not possible. I simply feel that we're prioritizing. And as we're building out the team, as we get the team big enough to where we don't need to prioritize, we can have project leads on every single small issue that may occur. Until that happens, though, we're prioritizing. That's it. Simple as that. Matt from YouTube, one of the proposals was to cap token sales at 8 million euro. Do you think the days of very large token sales are over? I think in the scope of venture capitalists and fundraising, there's only been one or two very large token sales. So I think, look, again, capping is stupid. I mean, that doesn't, so instead of, if something's fraudulent or done in a fraudulent way, people will only use 8 million. I mean, it's still stupid. I think what happens is you have people, just because you're an elected official, unfortunately, it doesn't make you a smart individual. There, unfortunately, is not a IQ test to become an elected official. So a lot of the words that are thrown out, let's say, or the opinions are quite idiotic sometimes. That's an idiotic suggestion. Plus, if you limit to 8 million, you're going to have a gap in the market between 8 million and, let's say, 100 million, where there's still going to be a large gap and people need to raise funds. So they just won't do an ICO. They'll come up with a token revealing mining astronomical event and whatever, and we'll just carry on. So I don't think something like that would hopefully ever get really voted on or pushed into reality, but you do get these type of stupid ideas from basically when you have roundtables. This happens. Errol, also on YouTube, can we safely store our tokens in our account in the homepage? Your tokens right now are virtual, so they haven't even been minted. So yes, they're 100% safe. There's absolutely nothing that someone could do if they gained access. We have intricate logs and we're able to track even if your account was taken over and somebody tried to, pass KYC and they weren't you. We'd be able to track it down. And it actually has happened once or twice, and we've been able to find out and revert back to the original owner. So right now it's all virtual, so there is no chance that somebody could actually take those tokens. Tim Mueller from YouTube as well. What does it still need to open the exchange? Any license or just development? What is needed? From the exchange itself, we have licensing, so there's no licensing needed there. There is some development for sure. Part of it, though, is making sure that we go through this beta process to get the best product we possibly can. We have talented people on our side. That doesn't necessarily mean that the 30 or 40 people involved in let's say the development, directly in the development or the UI, UX or the creation know the best possible solution to every problem. So letting 7,000 people, 20,000 people jump in and tell us their opinion gets us closer to that, and it gives us a better product. So we would rather wait a bit for a better product than launch into a market with a product that may or may not be better than everyone else that's out there. Ginger Croc, there's a general downbeat mood about prices at the moment. Are you more concerned about a lack of adoption? Without adoption, people need to cash out for services, which leads to sell pressure. Yeah, Ginger, I think there's a lot of aspects here that are causing this, let's say, drop in pricing or the continued bearishness of the market. Adoption, look, to me, there are no cryptocurrencies. I think trying to get adoption and get Starbucks to accept Bitcoin isn't really a solution, to be honest. Because, if Starbucks only accepted Bitcoin and forced people to buy it, then maybe it would be a solution because you'd be forcing adoption. But I can go to Starbucks and use my debit card, my cash, my euros, my dollars, whatever. I don't need to use Bitcoin. So the only people that are going to use it there are Bitcoin files who would have already had it anyway. They already bought it. They're not going to buy more for a cup of coffee. It's just stupid. So those type of adoptions, I think, are a waste of time, to be honest. I think the adoption that we need to see is from a regulatory standpoint that pushes into custodial, that then basically creates a framework where larger amounts of money can flow easily in and out of this market. And those things are being worked on because those things are very lucrative. And the people that have been in the custodial business and the dark pool liquidity provision business for the past 100 or 200 years are the ones that are going to make the change there, for sure. They are the ones that will retain control like they always have at some point in the very near future. And that's, unfortunately, that's the type of mass adoption or mass that we need. Walmart, Overstock, Amazon accepting Bitcoins doesn't really make a big difference. Why? Because, well, again, if I'm an Amazon customer, I'm not going to buy a Bitcoin if I don't have to, if I can just pay cash, unless there's a reason for me to do it. And even if there is a reason for me to do it, Amazon will have to liquidate. Amazon would probably liquidate, though, between a dark pool and not affect the underlying market. I think we need education here. We need ICOs and these other companies to understand that if they're going to liquidate 10,000 Ethereum, they should do it via an OTC order, essentially a dark pool order or a direct order between another provider, and not do it on Kraken, Bitstamp, or whatever the case may be. Now, I'm an exchange. I'd love to get the business myself. It means high volumes. But when it comes to a point now where they're pushing prices lower, they should stop. Collectively, nobody that raises in Ether wants Ether to go to zero, I would assume. So I think people need to kind of get educated and understand exactly how a market works. That would probably help us more than Starbucks accepting Bitcoin. Bjorn, will the debit card launch this year? Still on track to launch this year, yes. Though we had 2 providers. Now we're actively in talks with 4, mainly because there's been a couple changes, not on a regulatory issue there, but really on an operational side, where we want to focus a bit more on the debit card and offer a bit more of a unique product. And some of these providers can't provide that product in time. Thanks, Ginger Crook. I won't run myself into the ground, hopefully. See on Bart Bosser on Facebook, the AMA videos garner a few hundred viewers altogether, while any miseducated idiot shilling a crap token gets thousands easily. Does it bother you that your audience is much smaller? No plans to push the marketing behind the videos, since such transparent and informative weekly video are a rare gem. Well, I felt bad at the beginning of that question, Bart, but I felt a little better at the end. I think, we don't necessarily try to market these videos. I do think they will be here forever, so we'll be able to laugh at them maybe in a few years' time, or at least the first ones. Maybe we'll get a little better production value here. We do have plans to start to push some marketing behind these things, especially once the Crypto Academy is out, and we're pushing some money behind that, and we're bringing in new newbies. Let's say the plan is to create almost like a podcast at some point. So does it does bother me, not because I want more people to watch me. It bothers me because somebody shilling a worthless token gets a lot of viewers, and people get all hyped up, and they think the guy is a market guru, because people just generally don't know. That's frustrating. Not because they're not looking at me, but just generally because I wish people were just a little smarter at what they were doing. It would help us all out. So I think what you're thinking, or what you're saying there, is something that we're definitely looking to do. Not in the very near term, but definitely in the medium to long term, it is something that we are looking to do and probably will do. Okay. All right, guys. Any other? Wow, right at 6 o'clock. Look at that. It's like we have almost perfect timing today. I actually had no technical issues starting, and it's 6 o'clock, and it looks like we have no more questions. But I'll give you guys about a minute or two here to see if you want to pop in another question before we, move on towards the weekend, which doesn't really change for me. My weekend could be a Monday. I don't think it really makes any difference. But thanks for the question, Jason. Short answer, yes. Did I miss a question? Because, let's see. Hold on 1 second, guys, because Jason seems to have answered Jason. I don't know if he's answering himself. Give me a second here. Yeah, I don't see. If there was a question I missed, guys, please post it for me, even if you're not the same person who posted it initially. Peter Young on YouTube, beta is looking great. When will advanced version be ready? So the simplex and the intermediate are out. There's obviously still ongoing development for both of those. However, the trade view should be out in the next 7 to 10 days, somewhere in that realm. And then the next week up to the 25th will be used to basically fine tune it so that we can push it live to this open, not live, so that we can push it to this open beta. No problem, Bart. Thanks for stopping by for another one of my AMAs and listening to me talk for an hour. Fully appreciate that. Yeah, I see, Jason. I see you say I skipped your question, but I don't see your question. So if you could copy and paste it again, I'll answer it. But unfortunately, maybe it's me, but I do not know how to look. I can only see maybe 5 of the 4 last questions on Facebook. And I don't see an option to like view all. So if you could, please repost and I will answer it. I'm trying to find it still, so bear with me here. Oh, I see it now actually. Jason Stevenson, hi Kevin. Will STO tokens be tradable on CoinMetro? E.g. Tower Holdings will offer a token sale for redevelopment of an island resort on the Great Barrier Reef called GKI tokens, massive project. So they're all security tokens. I know everybody likes to talk about utility and payment and whatever nonsense. A token that's sold in an ICO with a fluctuating market price, and the funds are used to provide support to a commercial venture, by every definition in the world, is a security. So I think there's a lot of people that use the word that kind of use this as a marketing ploy to make their project sound more legitimate, maybe. They're all security tokens. So under Estonian law, not law right now, but under Estonian guidelines, we will not list initially what would be considered a security token by the FSA. We are working, however, closely with the FSA to help them get a better definition of what exactly a security token is, or what a security is, to be honest, in relationship with tokens, and how exactly to regulate them. So I'm not saying that we're going to be the ones to write the law, so to speak, but we're going to assist as much as we possibly can. In the future, yes. In the future, once regulation becomes a bit clearer, I think everybody will be listing quote-unquote security tokens, because that's what they all are anyway for the most part. So to answer your question, yes. But right now, for instance, our banking partner, because of how the guidance and the regulation looks, will not allow us to list what Estonia considers to be a security token. However, that particular project, we would probably still be able to list. It all depends on how yield is paid, and how that yield is structured, and how the tokenization structure works. I'm actually working with a project now that would be considered a security, more than likely, hadn't been for a very specific token structure that I helped create. So yeah, anyway, to answer your question, yes. Day one, no. And I see Pete. Any news on Moon? No news on Moon yet. When I get there, I will do my AMA in a astronaut's suit. So you will be very well aware that we're now on the Moon. So just when you see me in the AMA with an astronaut helmet on, you know what happened. From Geraldo, okay, we answered that one. Yeah, Goldman. Yeah, I did say that they planned. Well, I think it was always a delay. They just said they had no plans to do it now, which means it's a delay. Obviously, Goldman's not going to stay out of a market that as soon as the market's regulated, everybody and their grandmother is going to provide liquidity. It's going to be an overnight thing where it's going to go from, I don't know, Binance having all the fun to everybody going, why is anybody at Binance? That's inevitable. So yeah, I think. I don't think I actually read it as if they weren't. When I read the story, I didn't read into it that they weren't going to do it. It was just that we're not doing it today. No problem on the answer there, Jason. My answers are always long, unfortunately. The guy asked me, "What's up, Kev?" I think I took 7 minutes to answer it. So, it's a personal character flaw, unfortunately. Okay, guys, I don't see any other questions rolling in. So I'm going to leave it there. 6:05 my time. As usual, guys, have a great weekend. Spend some time with family, friends. Do something fun. Do not look at an Ether chart over the weekend, please. Literally take the widget off your phone that shows you how much Ether is every 13 seconds. Hide your phone under your bed. Do whatever you got to do. Don't look at it. I'll see you guys here next Friday on the next AMA, and I will probably see you, most of you, in Telegram over the weekend. Again, have a great weekend. Thanks for participating. Thanks for getting those good questions in to Reddit. Please give me more good questions, and I'll answer them next week. Anyway, guys, till then.